Charles Savage, it's good to have you in studio. Jeepers, it feels like COVID has kept us apart.
Yeah, it's lucky to be here. It's that time of year. We can wrap things up.
I did some data this morning, going back for the last 2 years on share prices in the JSE. The highest is not you. It's a company called Brickcore. Went up 700%. But EasyEquities' parent company, Purple, has gone from 34 cents to R2.45 in the last 2 years as of today. That's 621% of all the stocks on the JSE. That's astonishing.
Yeah, geez, Alec, I haven't looked at it, so it's a new data point for me. And it's not something that I focused on, but I got goosebumps while you were talking about it. Yeah, it feels good, I must say. And this is not, EasyEquities has been around 7 years, but EasyEquities has been 21 years in the making. So yeah, it's reflecting in the last 2 years share price, but we've been hard at it for a long time.
Why don't you just move the microphone down a little bit? Just move the mic down so we can see your face on the camera. It is a story that we picked up on at BizNews a little late because of your participation at the BizNews Investment Conference. At the time, the share price was around 80 cents. I know there was one of our participants who went out and bought 50,000 rands worth of stock on the strength of what you had to say.
Yeah.
But it's nothing new, really. This has been a consistent message.
It has, and I think those that have stuck by it for so long, they're not surprised. I mean, the doubters were always there, and you sort of get it. If you're outside of financial markets and you're outside of our strategy, to have a bold ambition to democratize stock investing and to be bigger than the biggest stockbroker in the country in a very short period of time, and Standard Bank was the biggest back then, a lot of people will bet against you. In order for us to make decent amounts of money, we needed over 500,000 customers. Standard Bank purportedly has around 70,000 customers. The entire market only has 250,000 customers. So you had to believe that we were going to be 2 times bigger than the entire market in terms of customers. And, if somebody said that to me and I wasn't the guy doing it, I'd probably believe him a little. So I get it. People haven't necessarily bought into it. But I think the key is when they hear our story and we unpack it for them like we did at the BizNews conference, they buy in. They see our passion, our purpose. They buy into what we're doing. And when you get close to the company, you get comfortable with the things that we're doing. And you fall in love with it. It's, there's lots of good stuff going on there. So there are more believers every day. I mean, the number that stood out for me in our results, and forget about the financial numbers, almost 50,000 retail shareholders own 60% of the group. Rewind 7 years ago, 1,800 shareholders owned less than about 6% of the group. So this has been radical democratization, not only of access to investing, but also the democratization of the Purple Group. I mean, we're now owned by literally thousands and thousands of retail investors. And that's really the magic. I mean, that's the promise we made, is that we would create a platform that enabled wealth, but also gave you access to fall in love or own shares in the companies that you loved. So
double-edged sword, though.
Yeah.
If the share price, at the moment, happy days.
Yeah.
You're the second best performing stock on the JSE. Anyone who bought Purple Capital in the last 2 years has made a lot of money.
Yeah.
What happens, though, if you fall out of favor?
And we will. You know what I mean? Like, we're a high growth company. We're on the kind of cutting edge of financial services, constantly innovating and pushing the boundaries. And is it always going to work? No. But what we've got a track record of fixing the things that don't work and resolving them. And so, when you've got loyal shareholders who love you, they stay much longer than shareholders that are there for a profit or there for a return. I think if you ask that 50,000 shareholders, why do they own us? I mean, the one reason is definitely going to be, we see this business growing and we see a return. But in many respects, and I had a conference last week, they are patiently holding for decades. And so, if we slip up and we make some mistakes in the next year or two, that's not the end game. The end game is 10, 20, 30 years out. And I said this as well recently. What do we want to do? What's the big kind of goal? And it's 100 years from now when people are looking at South Africa and saying, what radically changed the financial fabric of the country? What was the catalyst to create all this wealth that we see around us? And I want them to say it was EasyEquities. And I'll never be here for that result. But that's the goal. It's that far out. It's that ambitious. And I think our shareholders 100% buy into that.
At one of the recent conferences, Holger Meyer, who's one of our community members, said that he referred me to Sean Thompson, the surfer who I did interview a little while ago. And he said Sean was asked, he'd started 2 businesses, which are very famous in surfwear. He was asked, what business would you start now if you were to begin again? He said, I wouldn't start a business, I'd start a tribe. Sounds to me like you've started a tribe.
Yeah, I think that's a great way of describing it. Is there's a tribal following to what we're doing. People want to wear the purple group on their heart and say they're part of that tribe and they're making a difference. And you can see it so open, transparently on social media. I mean, our community of 500,000 investors, there are thousands of them leading the way on social media, hosting education, doing research. This weekend, I saw there was a group of them that got together, which was kind of old world analysts combined with our EasyEquities tribe, and they were doing financial education and literacy for 4 or 5 hours. So there is kind of a cult following. I hate the word, but it's tribal in that sense.
How many came along to it?
There were thousands online, and it had what I loved about it is we were no part of it. We've created a community that are standing, we've stood on their shoulders and created our business, and now they're standing on our shoulders and creating products and services that resonate with them. They see friction points in their community, so education being the biggest one. And they're not sitting there going, well, we're going to wait for EasyEquities to solve this problem. They're going, we're going to solve this. If we want our communities to take up investing and they don't understand what they're doing, why don't we lead that charge? Why don't we be the change? And it does feel tribal. It's maybe we all need to get some tattoos.
If you were in America, first of all, there would be more competition, and your competitors wouldn't have looked at you and said, well, the market's only 70,000, etc. But secondly, somebody would have looked at you and said, here's a couple of $1 billion.
Yeah.
Go for it. You haven't had that. And I'm sure you're going to tell me that it has its advantages, but the big number that jumped out at me out of your results was cost of acquisition, 50 Rand a person. That is an extraordinarily low number. And you said 2.5% of what the financial services community in South Africa pays to acquire a customer.
It is the magic. It is the magic in our profitability. I've looked closely at a lot of fintechs globally, and it's the number they get wrong. So they acquire customers like 2,500 Rand and even higher in places like Europe and UK, and then they never get the income right, and then they shut down. So the benefit of being really lean startup, I mean, we've built this out of an income statement of a group that was worth, when we started, 200 million Rand. Okay. The average startup in the US raises $40 million. So we've done it out of
average
$40 million.
And the big ones, the ones who've got ambitions like yours, it would be billions. Surely.
Yeah. I mean, Robinhood has now raised over $2 billion. So,
for
big
context,
money. Yeah, for context. So it's been good for us in that sense. It's built a high degree of discipline in where we spend our money and how we spend it. And it's created efficiencies on our income statement, and you've highlighted the biggest one. But what now is the question? Do we accelerate our growth plans? Do we lock out the competitive opportunity and start to spend more money on growth? And I think if you read the financials, you would have found the hints at that. I think it is time for us to take our income statement and invest it more heavily in locking out the competitive opportunity. Because unlike 30 years ago, if you'd built a business like this 30 years ago, you'd have a very wide competitive moat. Today, businesses are created that are our size in months and years in the same way that we've done it, and we mustn't get complacent. So I think in this instance, we've got to go and raise capital now. We're going to be very responsible. We're not going to raise billions, but we've got to go out and raise money, build the team capability, and at the same time, invest heavily in growth, because our opportunity is far greater than the 700,000 customers we've got.
Has Paul Rutherford played much role in this thinking? And I mentioned that because he is a guy who comes from Naspers. They know how about taking big bets.
Yeah, he certainly has. He's been a big influence. It's internally, the team have always wanted to do it. The conflict has been that the shareholders, and you know this well, have been there for a long time. So there was kind of prove your income statement. And once you've proven it, that'll deliver to the shareholders. And then there might be shareholders who want to stay for the growth opportunity, but there could be a lot of shareholders that want to exit. And you've seen big shareholders exiting big portions of their shares. And what that's provided is the ability for people like Paul to come in and say, hey, we see this thing as a growth opportunity, and we're going to accelerate and facilitate the acceleration of that growth.
Have you proved the template? I guess that's really what we're talking about here. You started off with stockbroking with EasyEquities. Now you've got property, you've got crypto, and I want to delve into that in more detail in a moment. But the geographic expansion was mentioned in your commentary to your results as well, in your annual report. And by the way, very well done in getting your annual report out at the same time as your numbers.
Yeah,
that's not often that we see that.
No. So I tell you what have we proven? I mean, we've proven that we can scale products along the EasyEquities platform rails very quickly. So Easy Properties, Easy Crypto, what great stories that are fast, that are both growing much faster than EasyEquities ever did. But sure, they've had unfettered access to a wonderful community which we had to build. Can we do more of that? For sure. The template for rolling out more products and services is essentially ask your customers what they want and then make sure you deliver it in the way that they want it. And that's what we did with Easy Properties and with crypto. So we're going to do much more of that. Last year, my biggest disappointment was that we didn't roll out a new product. In COVID, we did Australia, crypto, and Easy Properties last year.
Don't you need to consolidate sometimes?
Look, I think the team wanted that consolidation. Personally, I love new. I love the challenges that brings. And I think if we'd got ourselves into that kind of metronome of rolling out a new product every year, it was a good discipline to be in. Having said that, it was good for the team to sort of back full on all of the growth that we've had. But the year ahead, you're going to see at least 3 to 4 new products rolled out along our rails.
Similar like property, crypto.
Yeah. So the ones that I'm pretty sure that we'll deliver on. So Easy Ventures. So think Easy Properties, but now in the venture capital space. One that I'm so excited about. I mean, I've tried to raise money in this country several times, and it doesn't suit the entrepreneurs. What I love about what we'll do, which is different from what the venture capitalists are doing, is there's a flywheel effect, and that if we raise money from our community, they become shareholders in the products and services that they love. And that creates more shareholders and more growth, and that returns back to the customers. Yeah, exactly. And that's what's happened with Purple. So it's just taking our own case study and saying, imagine if we did this for startups. So I'm really excited about that. EasyFX, which the business has been there, but it hasn't been we rely on the rails of banks. We're getting our own license, and we're going to start to move money more freely across the platform.
Is there a cost advantage?
Big cost advantage for us to do it. And the big advantage actually is speed. So we're able to move that money very quickly. We're adding GBP and Euro and Sterling markets, UK markets. So that'll give our customers more destinations to trade, to invest in. And then finally, we will definitely also launch Easy Insure. So life insurance built for investors, because we think the industry, we think there's a disruptive opportunity to align a life insurance product with what you're doing on our platform. The more you invest, the better you invest, the lower your premiums, the less you need to insure your life for. So those are 3 that you can sort of write down that we'll definitely launch. And then we've got a host of others that we'd like to see launch, but it'll depend on how quickly we roll those 3 out.
You did introduce some new partnerships. Discovery Bank was interesting because on the one hand, you've got Capitec, and I'd love to know how successful that's been. But Discovery Bank, it's almost been under the radar. I certainly hadn't picked it up until reading your financial statements.
Yeah, they announced it at their big sort of reveal day I think it was in September, and it got quite a bit of media. But Discovery won't talk about it too much until it's out and it's live. So it'll be launched first quarter of next year. It's a wonderful partnership in the sense that it's 2 highly innovative businesses that are coming together to create something that is more innovative than the sum of the parts, if you know what I mean. So for example, we fit inside their money program, the Vitality Money program, which means that if you are a Discovery Bank customer and your assets are on EasyEquities, you're going to be valued more as a Discovery Bank customer. So I love what we're doing with them. And as I said, that'll go live first quarter. We've done
How
Telkom.
did Capitec feel?
Capitec, if Capitec wanted exclusivity, they would have demanded it up front. If you buy into democratization, you can't own it. And I think that's the key thing about all of our partners. They buy into the democratization of financial services, and they know that it's good for them. If you're a bank managing wealthy customers' accounts, it's much better than the alternative. And so, there's no jealousy, there's no guardrails to stop us from partnering. The key for us is to partner like-minded institutions that believe in the same things we believe in. We've made mistakes in that in the past where you follow a partnership because you think they want to do the same things you do. And in Capitec, we found a partner who deeply and sincerely believes in what we do, and we are super respectful of that. And they've done very well, and they will continue to do better and better as we live alongside them. Also, Discovery targets a very different demographic to Capitec. Discovery's, for us, it's the kind of attack on RMB Investec rather than the attack on FNB, Standard Bank, Nedbank, which is Capitec's kind of play. So it puts us at the high end of the market and at the middle to lower end.
You're also a disintermediator. You are really promoting education. You're saying to people, take control of all your own affairs, whereas Discovery is very much an intermediated model with working through brokers and its own sales force. I wonder how that's going to play.
I think the truth is that the balance is where we'll land. People are going to do more things for themselves, but not necessarily all of the things. So if I take myself as an example, I've got no excuse not to manage all my money, but I have limited time and capacity to worry about things that I'm not, my skill set doesn't speak to. So for example, I don't manage my own retirement funds. It's a 30 or 40-year journey, and I just don't have the patience for it. I manage my own discretionary portfolio because I have high conviction bets, if you want to call it, on companies that I really have fallen in love with. And then in the middle, I have a lot of investments in places I don't understand, but I do believe that they're going to own a big part of the future. So for example, solar or battery-powered cars. I can't express an opinion on Tesla. So I'll invest with people who are watching that market space. So I think in the outcome, the future is going to look like that. People are going to manage what they know and understand. They're going to outsource what they don't. And then the goals or financial things that in their lives that just take too long to do, they're going to give to other people.
But if you successfully partner with Discovery Bank, then that brings into question your competitor's model, which says, we don't really worry about easy because it's low cost, fractional, etc. They're looking at a different end of the market. But if you're getting the Discovery Bank investors or target market to come along to easy as well, do you not have to enhance your product set?
Yeah, and we have. So the product capability continually sophisticates. So, for example, we put in limit orders very recently, which the community have been asking for, which raises the level of sophistication radically. And we'll keep doing that. But
stop losses?
Yeah, stop losses. So you can put stop losses, take profits in now. You can only do it on the top 100 SA shares and then the whole US market.
So
and that's
what don't you do that if you like, full service stockbrokers
charge? That's it. We do what they do. We do it easier, faster, cheaper, better. And I guess when we started, we couldn't say that. We focused very much on being easier and cheaper. But our level of sophistication is growing all the time. And, if you look at the pace at which we're innovating and the pace at which they're innovating, how long before we go past them?
Have you read Clay Christensen?
I have, yeah.
Because that does seem to me to be very much aligned with his theory of disruption. The Korean steel mills who started in the United States small were completely ignored by the big steel companies. And of course, there are no more steel companies in the US. Is that part of your playbook?
100%. And, while we built Easy, and I think this is where the market has had a blind spot on us, we obviously built Easy for a younger demographic, which meant they had less money. But it would be foolish to say that they're poor. This is a younger demographic who haven't inherited the wealth, haven't had the acceleration in their own income statement through their wages and salaries. But this is a highly educated, informed customer base who are 100% are going to own the wealth in this country. So where will the wealth be 20 years from now? It has to be with us. Our responsibility is to make sure we keep our customers happy. And there's going to be lots more disruptive businesses that come and attack us to try and take our customers. And so we're going to have to defend and keep moving forward. But if we stop today and there were no competitive interests coming into the market over the next 20 years, the wealth would be with EasyEquities.
It's extraordinary, actually, when you start unpacking the implications of the Discovery Bank partnership, because it really does flag where your disruptive road is going. There were two other partnerships that were interesting, Bidvest Bank and Telkom. Are they, again, my mistake, perhaps I hadn't heard of them, but could you unpack those for us?
Bidvest was the first bank we ever partnered. So it's been around 5 or 6 years. we've never really come to terms in terms of how that's going to work inside Bidvest. So no one really knows about it, including most of the Bidvest people. They've had a lot of change within Bidvest. So, at some point we'll sit down and find a way to accelerate the growth there. So it's a nice growth rail that we've got, but we're not using well enough. And that's our problem. We must sort that out. Telcom's exciting. Telcom are the fastest growing data service provider in the country. Almost a deal with MTN would have put us, inside MTN as well. That would have been really exciting. So who knows? I don't think that's over. But I love the Telkom team. They share our dreams and aspirations around this democratization. That'll launch first quarter. In fact, that'll launch ahead of Discovery. That'll go live. There was a date set. I'm just going to say February. Let's see if the team stick to it. And that gives us, access to about 10 or 12 million South Africans. And when you consider now Capitec, Discovery Bank, Bidvest, Telkom, you have to go quite far to the corners of South Africa to find a point of access that we can't access. And that's why I'm confident that the next phase of growth, deliver down the rails that we've got, deliver more products down the rails that we've got, and then finally, Charles, go and do something somewhere else. Go and see if you can replicate this business somewhere else, on the continent, in Asia, Eastern Europe, and out of our Australian business.
Crypto.
Yes.
It appears to be very successful. 500 million in deposits or assets that are held by the tens of thousands who've invested through EasyEquities into crypto. What? Just explain how that impacted the financial results. Because I saw there was a revaluation.
Yeah, so we had an option to acquire 51% of the company if we met specific distribution goals, and they were really simple. One was number of assets. And we hit that number of assets last year in our financials. And at that time, we had about 100,000 customers, and I think there was 300 or 400 million in assets, and that's now gone above 500 million in assets. And it got big on us quickly, as these things do. And so in February, we didn't revalue it because it wasn't as big, and we sort of felt that, it was questionable whether we were going to execute the option. But by the time the audit came around, the auditors walked through the door and said, listen, you've got this option and you've got the right to buy 51 essentially for naught. It's not worth naught. So they did a discount valuation, cash flow valuation on the business. In the last 12 months, it had profitability, PBT of about 8 million rand. So on a PBT base, it was like a 12 or 13 multiple, which in the crypto space is super conservative. And so they had to write it up. I mean, we would have liked to avoid the write-up because we don't like those things. And we've stood accused of writing up businesses in the past that didn't materialize in terms of the value that we attributed to them. But I think in this case, it's a very conservative write-up. Easy Crypto has over 100,000 customers, and we're saying the enterprise value is somewhere near 100 million. When EasyEquities had 10,000 customers, I raised 100 million from Sanlam. We raised 100 million from Sanlam at a valuation of 200 million. So is it worth the 55 million written up? It's worth a lot more than that.
You're not doing a Corp Capital on us. Remember the Corp Capital story?
Well. Yeah.
Okay. That satisfies me. Also have a look at the compound annual growth rate across the board. In fact, when we put EasyEquities or Purple Capital into our business portfolio, I did some projections for the end of this year. They all came in roundabout right, excepting for the customers. I had a number of probably, I think it was around 600,000, and you've now got 900,000 active customers. How come you've been overshooting on that side? Or how do you define active customers, maybe as a starting point?
Yeah, so active customers are anyone who's got an investment account that is invested in the market. So you've had to have taken your own money and put it in. And the number was 700,000, so I'm not sure where you got the 900 from. But it's still above your 600,000 projection. So, the acquisition rate, we acquire customers about 60,000 new customers a month. That's registrations. Conversion of registrations into real accounts that are investing is about 47%. So we're adding about 30,000 roughly new active customers a month. And that's been going on since COVID. So that's why those numbers are bigger. I think everyone felt that the COVID experience was good. The tide was going to go out, and it hasn't gone out. I mean, we're still acquiring 60,000 customers a month. That's what we were doing 18 months ago. And I do wake up.
And it's word of mouth.
It is. It's more than 65% of our customers are referral. And that goes back to our community. So, they have an experience on EasyEquities, and the overwhelming experience is, oh my God, this is easier than I thought and I can do it. And if people have that experience, they turn to their friends and family and say, well, if I can do it, you can do it. And that's what's happening. I think the past financial services, it was difficult to do these things. And if you worked it out for yourself and it took time and effort, you weren't confident to say to your friends and family, well, you should do this too. We've made it that easy that people can. They can confidently go on and do this for themselves.
If you didn't have 10,000 Rand, it was per trade.
Exactly.
It was a stupid idea to open a stockbroking account.
Yeah.
With Easy, you can have 100 Rand or 50 Rand. We've spoken about the secret. The secret, certainly the cost of acquisition, but that fractionalizing of investments. Now, I know you've got an interest in the racing industry, and before we go, we need to pick up, because there was a big announcement this morning on horse racing, which finally seems to be coming right. And I know I presume you've been involved in that behind the scenes. But this whole fractionalization of betting, which started in horse racing, where you could take 1% of a pick six and actually have a chance of winning, smaller, but winning. Was that where you got the idea of fractionalization from?
No, and the fact that you just said it, I should have got it from there because I'm involved. But we got it in the realization that our customers wanted to own the shares they loved and they couldn't afford them. And, the biggest kind of example, Berkshire Hathaway. Who doesn't want to own a piece of Warren Buffett? And we didn't have a solution. And I literally spent 6 weeks, sleepless kind of nights. We'd stop the business from going ahead saying, how do we solve this? We can't write to CEOs and ask them to do, 10 for 1 or dilution, not a dilution, a share split. And I found it in the company legislation in America. The NYSE, from the day it was constituted, forced that as a result of corporate actions, if you gave a fraction of a share, you could not force customers to give you more money and round up or to settle them with cash and then round down. And that's typical of America. If you give me something, you must give me the rights to keep it. So it's been around for over 100 years. What we did is we looked and said, okay, well, if they can do it, we can do it here. And we went on a journey to own that. We've patented the fractionalization of all security, so we can do any security. We've just done bonds, not for release to our customers yet, but it's been released on the platform in beta. And we're going to do lots of other asset classes in the future as well. And fractionalization, I think this is another blind spot that we all had as industry participants. You go like, what is the point of investing 10 Rand? But don't we all start as 10 Rand investors? And is it not better to learn our lessons with 10 Rand? Or to engage with a new activity, a new investment type with small amounts of capital. And that's how I've started. I mean, recently I bought into these marijuana ETFs and companies. And what do I know about it? Zero. But I started with $100, and now I'm getting their financials, and I'm listening to the CEO's report, and I'm following the share price, and I'm engaging, and I'm understanding all the applications of what these guys can do. And it's led me now to psychedelics and investing in psychedelics. And so I'm on this wonderful journey of alternative medicine that would never have been started if I didn't allow myself a 100 Rand investment in a $100 stock. So fractionalization allows all of us to extend our understanding without the risk of taking big bets.
And having skin in the game.
And skin in the game's key. There's no doubt in my mind. If you own 10 Rand of Woolworths and nothing of Pick and Pay, and the two are parked next to each other, you're going to walk into the Woolworths every single time. Skin in the game is the difference.